Hello, chart watchers, and welcome to this Tuesday, April 3rd, Market Watchers live show with your host, Aaron Swenlin and Greg Schnell. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's go ahead and take a very quick peek at what's going on in the market right now. And certainly a bounce today, although we can see that most of the gains that we were getting earlier are now being pared back, and we could end up seeing the indexes move into the negative at this point, looking at how they are pulling back right now after setting up some double tops. The NASDAQ also lower. Looks like IGH, the S&P 400 ETF, is still doing okay at this point. And Russell 2000, you can still see we're still in a rising trend going on with small caps. TSX is down and into the negative, currently at its intraday low, nearing its intraday low. At this point, we can see that Treasury yields are higher right now. And UUP, we got a gap up and it pulled back, but it does look like it wants to come back up. We can see that USO is pulling back after a nice morning run to the upside. Gold is gapped down, and we can see that we are moving continually lower. As far as the VIX is concerned, we are seeing that moving lower. So this tells us that the fear factor might be lessening somewhat in the market at this point, with a reading at about 2240. XLV is the best, the highest mover as far as our sector ETFs are concerned, and that is the healthcare sector, which does have me a little bit concerned, given that that is considered a defensive sector. And following that is materials as the other sector doing well, and both of those are in the defensive category, so that could be a problem. But with that, let me go ahead and welcome Greg back to the show. It's great having you in here for Tom Bowley. He's regularly our co-host, but we have Greg in here since Tom is off at Disney World, I believe.
Yeah, I think he's doing Harry Potterville or something, or Hogwarts Castle or something like that. So yeah, I'm filling in, and we got lots to go through today, Aaron. We had a wild ride in the markets yesterday. They didn't quite slam into the close, but it was down 2/3 of the day. So we're really looking for a base to build here, but it hasn't started yet.
Not quite, not quite. So you're doing pretty good though this morning. Is it nice in Canada today?
You know, it is. We have had just the longest winter. We still have 2 feet of snow on the ground in the yard. So normally our golf course opens about April 15th. As you could tell, that's probably not going to happen this year. So we're a little desperate for some heat. So.
Yes, yes. It's pretty blah here, actually, in California right now. Clouds, kind of a high of 65, 70. Not horrible, but Weekly schedule. What's coming up this week after I talk the weather? We have Mary Ellen McGonigal coming in tomorrow, our first female guest. So I'm very excited about that. Bruce Fraser, Mr. Wyckoff, will be here on Thursday. Everybody always loves him. And Greg, you'll be filling in for me as far as doing a workshop, which I very much appreciate. And I think you were going to be doing it on full stochastics.
Actually, I think I'm probably going to lean towards Keltner scans this week, just to try something different. I don't know that we cover that off very often, so we'll try scanning for something unique. While the market's pulled back, a Keltner scan works really well, so we'll look for that.
Perfect. And as for today, we've been working hard on our agenda today. It should be a great one. Greg and I, I'm going to be going over technical scans in our first segment. Currency review. Greg is here, so we might as well get your expertise on the currencies. 10 and 10 to 1. Our first symbol is going to be Blackstone Group, and I will be doing the 10 and 10, and Greg will be feeding me the symbols. Go ahead and put your requests in the chat room. And for sure, like the ones that other people have requested, because our most popular request will make it into the 10 and 10 to 1. And then we're going to finish off with agree or disagree. And the poll is already up in the chat room. So go ahead and take it, and we'll go over our statement later when we get there. But for now, let's go ahead. I'm going to pass it back to you, Greg, to get started with our technical headlines and news.
Okay. So the big thing this morning, I think that we need to look at. So I know Tom usually goes through economic reports. I don't really trade off the economic reports, so I'm going to go a little bit differently today. One thing I want to talk about is, so this is the daily chart of the S&P 500 since the beginning of the year. So this is December 31st, and so you can notice that we're testing this previous low right here, and I know the intraday levels are different. This is the close. And so this is a pretty important chart. And if we just go back and change the date here to 2016, just to, well, I could even go to 2000. Whoops, made a mistake there somehow. What I want to do is just show you that, we've got this huge uptrend basically since the February 2016 lows. And recently we've cracked the uptrend, obviously, and we're working sideways. The main perspective that I want to share is that obviously we're no longer in the uptrend. But the question now is, if you're going to try and make money in the market, we need to trade based on maybe short 15% spurts instead of a nice consistent 2, 3, 4% per month or whatever. So more important to me right now is to try and find things that are starting to hold up relatively well while the market pulls back, and start to get into that. So the picture I think that's most important on here, and this is the month to date, is just being down 5% here over the last 4.67 over the last since March the 5th. That 20-day period, obviously, it's been almost straight down, and so we bounced off the February low, bounced back up. Now we're retesting the February lows. When we do that, one of the things that we want to use is our breadth measurements to help us figure out when the market is getting closer to a bottom. And it doesn't give us the answer, but it gives us ideas. And so yesterday was a really lousy day in the market. We were down 400 at the close, but our net new high data, so this is the net new highs, is new highs minus new lows. So new 52-week highs minus 52-week lows. When we get a sudden push for the market moving down, what we normally see is an expanse in the net new lows compared to net new highs. So I've put this purple level on my chart. And essentially, when we make more net new highs than 80 on the New York Stock Exchange, that's pretty bullish. And so as long as we're getting up here, roughly every month, that's a pretty good place to be. And we're doing okay. Well, recently we had this big push down, and now, we've wobbled along here, but we haven't been able to get back to making net new highs. My point would be, even on this minus 500 day we had yesterday, we hardly had any more net new lows than new highs. We were still minus 22 or minus 25, right in that area. I think this is updating this morning. So, but you can see we closed at minus 50. That's not really that out of line. And considering that, we're pressing right down here on the bottom end, it's nowhere near as bad as it was at the lows of February. So stuff that had made new lows is making higher lows now, even though some of the overall indexes are getting hit. And quite frankly, a lot of that is happening because of the NASDAQ. So I've shown you this chart, but now let me just roll it out in a larger picture, and there's a reason to do this. And the way I've done that, by the way, is I've selected start and end, and then I can use the slider here to control how much time is showing. But what you see back in 2015, stock market topped in here. And as it topped, it just couldn't go on and make more net new highs. And so all of a sudden we're hammering down, and we continue to work lower. And sure enough, we got this double low. And it's this double low that, is a nice place to try and get on board for these rallies. Over here, we briefly dipped below previous support, and then we fired up on a really big run. So just when everybody's getting nervous, it was actually the best place to get long. But one of the charts I put in my blog last week on Commodities Countdown was that we had made a higher low in February than we did in January. And so here we are over here as we test this previous low. We continue to make higher lows here in net new highs. And so for me, this is a place where I want to be trying to get more bullish. So while the market is pulled back, and if it surges forward, or when it surges forward, hopefully I'm fully invested. And if it's not going to hold me, then I'll just take some quick stops and get out of the market. So the goal is to try and get invested while the market is starting to improve in terms of underlying breadth. And obviously you still have to keep your stops tight, because if the market does continue to decelerate downward, then we've got bigger issues. But at this point, I think the sentiment is so negative, I'm actually looking for an upside surprise. Now, let me just show you on the Canadian market, and it's a much smaller market, but we see the same sort of thing. So this, you can use this, as a simple guide. But here we have May 2017, and the Canadian market was basically topping out, and the U.S. market continued to go on a run. But so just so Canadian investors could see the difference, all of a sudden what you see is the stock market's sliding, and we just can't make any more net new highs. Now, everything in August started to turn together, this trend line break, and we ran up, but we still didn't make very many. So we had a brief run of roughly a month or two, and then we couldn't really get going again. So as the Canadian market started to break down, one of my points for people listening on the Commodities Countdown was that we were starting to see a lot more lows, and we're not getting the breadth thrust we need to really get going again. And if I take this and just using a different way of changing the chart settings, show you back in 2015, January, February, March, we started to make our final highs. And then by April and May, we were already in decline while the US market was still making higher highs. So I think the high on the S&P was May 15th, and the Canadian market started to pull back. And then we went almost a whole year without getting it. And then all of a sudden, coming in here for the first time in a long time, we start to make higher highs than in Canada's case, just smaller market, 50 net new highs per day. And while we're getting all of this breadth coming through, that's a really good place to be aware of, the market strength is there. And then as the market strength starts to weaken, then you get an idea that you might have to be more cautious in the market. So I think it's a pretty good tool to just help people be aware of what the overall situation is. But again, on some of these, and here we had another low that we tested, a previous low, and it was a very good rally. I mean, it doesn't look like much on this chart, but it was 1,000 points. And then coming down to this low, we made a slightly higher low in February. We had a higher low on the net new highs, and that was a pretty good buy signal. So whenever you're testing a previous low, you want to try and buy that dip if you can. And right now we're doing a third test, right? We've got kind of a third pullback. So you can see it down here on the S&P. We have 1, 2, and now we've got this third. Now, again, it might not hold, but if as a risk reward place, you have a definite place where you'd like to leave because you're close to previous lows. If they aren't going to hold, you just want out. If they do hold, then the opportunity for you is to get this big ride very close to the lows and hopefully go back, and if it doesn't test the high at 2,900, it's going to test the high at 2,800. So those are just kind of ideas to help understand where we are in the market. But in general, for the US market, let's just go back to that previous chart. We have not hit the highs, and I'm going to hand it over to Aaron here. But as we make higher lows in the net new high data, try not to get too bearish here. And I get the feeling how uncomfortable it is. We all feel that. But as technicians, we're actually at a place where we should look for support. And if nothing else, just a rally, but a tradable rally of 10 or 15%, and you can make an annual return in a couple of months. So that's where I think the market is at. And as we sit here and work, I might get stopped out of a few trades, but I'd like to try and have most of my trades ready to get long.
Yep, I can see that. I'm going to show everybody my decision point new high, new low charts, and let everybody know how they can get to them. So I actually have downloaded the Decision Point Market Indicators chart pack. And within that chart pack is a list of the new highs, new lows charts that we offer. And as you can see, it's not just the NYSE. We have the NASDAQ, S&P, quite a few choices here, and they're already presented and ready for you. So if you want to download any chart packs, and caveat, you do need to be an extra member or above, because as a basic member, you only get one chart list. So you can't download a ton of them because you only have one available. So you just go down here and manage chart packs, and you can find the various ones we have. They are free. And the one that I'm showing you right now is from this Decision Point Market Indicators chart pack. So let's go back to where we were. So you showed us the NYSE and the Canadian markets, new highs, new lows. So I'm going to go ahead and let's take a look at the S&P 500 one. And I've annotated these along the way from various other times. So I thought it would be interesting to pull it up with those annotations. But as you can see, what we are looking for, and Greg, I think you talked about this, is you really want to find those climactic readings, those readings that are sort of out of the ordinary, that spike. And typically when you get these spikes, you should expect the opposite to occur. So for example, in this case, I marked off where we had exceptionally high readings for the new highs. And typically after that burst, you can see we end up with a little bit of either consolidation or a little bit of downside movement. Of course, that did not occur this last time back in 2017. The market was very strong. If you remember, we were in a parabolic move. So it was going to take a lot to turn that around. And as we can see, we got some even larger spikes here. I mean, look at this reading back here in mid-January. And that came in long before this decline came in. So we were already seeing a little bit of warning. But now what we're looking for, of course, are the climactic readings that come in on the low side, because right now we're trying to find the best place for entry. And again, you can look back and see some of these really climactic readings, these really high nets to the new low side here. The new lows were really spiking back here on the way up. So that's what I'm looking for. And I think you pointed out also the fact that, even though we had some of these really bad days, including yesterday, we didn't get, the spike didn't go down lower than the previous. So we're actually looking at a more of a positive divergence here. So I can see looking for a bounce right around here where we've got the previous low back in February. But let's go ahead. I'm going to show you the NASDAQ one as well, NASDAQ 100. And some of the things I was noting on this chart. Actually, I want to make this bigger. Okay, so again, what I was noticing are, in this case, this would be a bullish confirmation. Right here, you can see rising on the net new lows. We're getting less in this case from the previous bottom. So I think that is good news. At the same time, though, I really like to see those giant spikes. And maybe this was as big as we're going to see. What really I think was interesting to note was that we had these net new highs, and then we got less on this move that actually put price at about the same level we were seeing here previously. And, I think that was kind of a harbinger of not doom, but I think that it also gave us some warning that we might see a drop like we did catch here earlier. So,
And I think your net new highs there, or your new highs. So you're not showing net new highs. You're showing
correct.
highs up and lows down, which is another display option at stock charts. But one of the key points that she makes is just when you see that exceptional volume, if nothing else, you have to be careful.
Exactly. And I think on the new high side, like I said, it really has given some pretty good warning when we've gotten those climactic readings. And we're not seeing those kind of climactic readings just yet. And so honestly, I would want to see more on the new lows side, just because that'll give us that even more climactic setup for a bottom. But I'm still you know, I like the ideas you're talking about is to get ourselves ready for a, you know, a bounce at this point. We have to be nimble, obviously, when we're trying to catch a market bottom. But I have to say, you know, I'm still really, I don't know what the right word is, nervous. I don't know if that's the right word, but I'm not so confident. I guess that's the thing. I'm not so confident that we are truly at an area that's going to bounce. I mean, I'm starting to see some serious breakdowns in my indicators, and like I said, you know, I'm going to show this real quick before I get into the
Hold
tech.
it before you leave. Can you
Oh,
show your chart settings? Just scroll up so
oh,
people
absolutely.
could take a screenshot of the chart settings.
Sure.
No, no, right under where you were.
Yep.
Yeah, that one.
Mm-hmm.
Yeah.
So it's price pair up down. You can get the exclamation point symbols are all mostly decision point indicator symbols. So that's where you can pick up, for example, the NASDAQ. But like I said, the best way to do this, guys, is to go into your account and download the chart pack because, you know, it includes all of these indicators so we can look at advances, declines, my PMO analysis, put call ratios. You get all of that in this particular chart pack. They're free. You know, why not? is what I would say. If you have, I don't know how many chart lists you have, but I know we can have quite a bit. And so I would recommend going in there. But let me go really quickly. I just want to show you my sector table here. Let's see. Whoops, no, cancel. Okay. So one of the things that Carl and I watch is we keep on our own this sector scoreboard. It's a manual input, but you know, we don't usually see too many intermediate term trend model changes. Those are your 20, 50-day EMA crossovers. The long-term trend model are your 50, 200-day EMA crossovers. And we have not seen all of our sectors in a neutral position on the intermediate term trend model. Wow, I can't even remember in the last year, honestly. I cannot remember. And the fact we've lost some of these long-term trend model signals as well. The good news is right now on those long-term trend models, you're still seeing those defensive sectors here still not looking healthy. And as I wrote about this yesterday in my blog. If I start seeing an increase as we're coming out of this, and I'll use air quotes, bottom into a bull market, if that is on the back of a lot of these defensive sectors, that would worry me greatly. And right now, as I was saying, healthcare is currently the sector doing its best right now, and consumer staples isn't far behind. So something to note. And as far as our technical news, but with that, I'm going to go ahead and move on into our technical scans segment.
Yeah, and while Aaron's doing that, the one thing that I would say is now that the market has actually cracked the uptrend, until we get a new trend defined, it becomes a trading market where you're trying to get in, take money out of a trade, and um, and not be so buy and hold. And the main reason for that is because we don't know if the market's going to end up working its way all the way to the bottom. And so the big issue for us now is to try and find stuff that's holding up well. And again, in that week period, there was over 400 stocks that made new highs in March. So in the U.S., so I think there's plenty of stocks that are still trying to go higher while the market is breaking down here, and we just have to focus on those. And they might not be the names, the Amazons and the
Right.
and those. Yeah. So
And honestly, the fact that those are failing so much, they hold so much of the market cap in some of these indexes. It just, you know, I think it's important to look at like the NYSE, like you were looking at, and areas where they don't dominate necessarily.
yeah, the NYA, I think its bullish percent index is 50 or something, and the the Nasdaq 100 is only 20 or 30. Like uh,
Right.
all of the top 100 just got smoked because they're all in the ETF baskets, and when they start selling, they all get sold. Uh,
Exactly.
anyway,
Okay, so I'm going to start off our technical scanning. I'm going to show you one of my scans and sort of build from there, but then I'm going to show you how you can get to and manipulate some predefined scans just so we can look at some interesting results. So I decided I'm going to do, let's see, think I had picked this one. 20-day EMA crosses with the 50 above its 200. So I can just give you a look here at what my scan is. So first of all, so this one I use because this helps me with my intermediate term trend model. I'm looking for 20, 50-day EMA crossovers. And in this case, I want them to be positive because I'm looking for I want a bullish configuration on the stocks that I pull up. I caveated that with a daily volume, close above 5. It's a US stock. Sorry, my Canadian friends, but that's what I'm looking at this point. And then here's where I look at the PMO and see if it's turned itself around as well. So I'm going to run this scan very quickly here.
And what is your PMO line there trying to scan for? What is the highlight?
So yeah, what I'm looking at is, so you've got today's line, and I want it to be below, greater than today's PMO signal line. So I'm looking for a PMO that's above its signal line.
And yesterday it was
yesterday it wasn't.
Okay, good.
Yeah, thanks for that. So I came up with 19 entries here. And of course, when you get all of these entries, you kind of are, well, I have 19, now what do I do? What I recommend is I have what I call a scan dump, and I got this from you actually, Greg, and I don't know if you still do it, but I have these chart lists where they're really temporary. I'm just trying to get through my scan results, and then I can move.
Yeah, I do them all the time. I've started naming mine after rock stars. I've got Dire Straits, and I've got, so I've got a whole bunch of baskets.
Well, that works pretty good. So I go ahead and do my candle glance, and my candle glance right now looks different than what you'll typically see. And I like to look at my PMO when I'm looking at candle glance. So that's why I have a custom style, and it's honestly very easy to make your own custom style. And I will just, let's see, go over here. I just want to show you how easy it is. Okay. So all you have to do is when you go in, and I'll show you my chart list, I'll just pull up let's just look at the SPY, for example. All right, and so if I want to make, for example, if I wanted to make this my candle glance view, and I recommend, now you know those candle glances are like thumbnails, they're tiny. So I recommend picking like your 1 or 2 absolutely gotta haves when you want to weed out scans. So for example, I only like the PMO. So what I did is I created a chart style called candle glance. And there you go. So it has the way I want my candle glance to look. And so that's how you can use that to put what you want on there. You can set up, is it a 6-month chart? Is it a, this one is a 5-month chart, for example. So that's how you would set up your candle glance. And like I said, for me, the weeding out of the candle glance is completely, well, it's not helpful for me at all unless I'm able to see the PMO. So that's what I have listed here. And so the first thing I do is I'm going to try and just weed out the ones that I don't like the setup or don't have a chart pattern that I like. So for example, this one looks pretty good. It's in a rising trend channel. I can kind of look at that. That might be an interesting one. Flat PMO, flat price action, not interested. You just can dump them right here. Again, more of a flat consolidation. It's in the middle of that trading channel, not enough there. This one looks very interesting because I got the scoop. You can see the double bottom that has executed. Maybe we're getting ready to form a flag here. So I think that one would be interesting to look at. And again, rising trend channel, but I don't like the fact it spiked down like that. We're getting kind of a fake out there. So I probably wouldn't look at that one. This is a nice breakout. Getting ready to turn around to a buy signal. I'd probably leave that. Top of a trading range, no, not interested. You can also see the PMO's been angling lower. So anyway, that is kind of just a brief look at how I would weed out some of these scans and having your indicator, your prime indicator on there to help you do that. And as I said, getting comfortable with chart patterns, recognizing trading ranges, and that sort of thing with breakouts. There you go. So for example, let's go ahead and we're going to look at Kirby Corp. Here we are. So I'm going to just throw this in annotation mode just so you can see what I've been looking at here just by. So I'm going to look at some support resistance here with the right there. So we can see a really nice breakout here. I might look for that pullback, but you know, this is a nice clean crossover. You have a PMO that turned up above the zero line. That's good news. Look at the OBV is starting to poke up and try and get ahead of previous tops. Looks like it has actually. And now we have a scooter that's it's already was healthy and now it's improving even more. So this would be one that, okay, well, maybe I'm going to add this to one of my other lists. So I'm going to save these changes. It's still in my scan dump, but I'm going to move it to something more interesting. And we'll say Market Watchers Live Charts. And there we go. So now I have that in a watch list or however I want to set that up. And so that's what I wanted to show. Now, real quickly, we have about 4 or 5 minutes before I pass it to you for our currencies. I wanted to show you how to do manipulate some of these predefined scans. For example, even if you want to take them from here, and I'll show you how to get here very quickly. There you go, from your member dashboard. Move on down here to the scanning window. And below that, you can get to predefined scans, and it's going to bring you to a report where we run scans already. They're already set up, and you can go in here and look at them based on, you know, what index they're in, etc. Or if you like one of these scans, you want to run it more often. So for example, strong volume gainers, maybe you want to do that. So you can pull up, you pull it up, and of course it's giving you all those 52 that we saw. But maybe I want to, that's 52 results. Maybe I really want to, you know, weed that down a little bit. So I can click here to edit it. And now I can put in whatever it is I want. I can now say, okay, well, I only want ones that had a close that are greater than 5, for example. So let's go ahead and insert that. And there you go. So I can say, all right, well, I'm going to make it, I want it to at least be a $10 stock. So we'll put that in there. And I check my syntax to make sure it's good. Yep, everything looks nice. And now I'll run that scan. And how many did we get? All right, well, we weeded it down from 52 now to 28. And that was just a very simple, you know, let's make it $10 or more. So you can get in here and use these predefined scans. They're really helpful to have and to get to. And again, I'll show you how you do that. Member dashboard, predefined scans down here, and there you go. The one thing I do want to note for you as well is, you know, these scans are great with the results, but remember you do need to be an extra member if you want to save some of these chart lists, if you want to have more than one. So at this point, I am going to finish this up a little bit early. I hope that this has helped a little bit on the scanning. Oh, I do want to show you one other thing.
Aaron, before you leave there, somebody asked what those red and greens were.
That tells you, as far as the total, you know, what the change is from, I think it's from yesterday, am I right?
I think that's right, yeah.
Yeah, so we have 25 less new 52-week highs than we did yesterday when we ran this scan. So that's what that is. And again, so you can...
And you were going to go to your blog.
Yes, the blog. So I want to show you in the Market Watchers Live blog, and honestly in all of the Decision Point blogs, at the bottom of every single one of these that I do, and you can see, you get an idea of what we covered. Sorry, I make everybody dizzy here. But at the bottom, I have helpful links. So not only does it give you the YouTube channel, but my scan article is in there as well. So if you wanted to go in, and this is sort of a basic scan that I have run, you might have to, I manipulate it on my own depending on what kind of results I get. But you can borrow this and simply copy and paste it into the scanning workbench. So that is the completion of that, and I'll show you the summary slide here. So what I wanted to do is introduce you a little bit more to the advanced scanning workbench. So I went over my scan, and how to update it. We looked at predefined scans, and then I showed you very briefly how to sift through some of those stocks. I only looked in particular at the SPY and Kirby, but I think it gives you the idea of how, when you get all those scan results, and I know you have the same issue too, Greg. I mean, you have so many, but you really want to whittle it down. You want to look at the ones that are worth it to be on your watch lists. And so trying to come up with a plan of attack to sift through those scans, and by setting up your own candle glance, you can, really move that process along.
True, and it is Masters weekend, so you can have scan results of 400, and with all of the commercials, well, we have to watch golf. We have lots of scanning time. So anyway, I like to look at a lot of scans, and then one of the things I'll do is save them to a chart list, obviously under 500. And when I save them into a chart list, then I'll sort them, and I'll just quickly look down and see what sectors, what industry groups are hitting the new highs, or whatever I'm scanning for, which ones are giving me the signals now as a group. And then I might whittle it down from there, or I'm a chartist, so I'll just sit there and scroll through 400 charts and kind of check them out and see what I like. And are there some really nice setups? Sometimes it's a 2-year base, sometimes it's a 6-month base, whatever I'm looking at. So, I'm never desperate to try and get it down to just a few. I like looking at charts, so I'm fully comfortable to have a couple hundred in my scan and just roll through it. But some people want to get it whittled down, and you can always tighten the parameters, either volume or whatever, price of the stock. You can find different ways to tighten it down. So.
Yeah, absolutely. And I know, for example, Tom, he scans on his strong earnings chart list. So
yeah.
He'll keep that chart list, but he'll scan on it and then, get those pieces out of it that he wants and see if there's any, things that are obvious as far as sectors or industries and that sort of thing. So, but with that, I think we should move on to your currency review.
Okay, there's a reason I wanted to do currencies today. I've been covering it off on the Commodities Countdown, but I think it's pretty important that we're aware of the setup in currency. So the one thing I want to make sure everybody's aware of is when currencies change directions, usually it affects the equity markets, the currency or the commodity markets, and the bond markets. And so when you see all 4 of them happening at the same time, that's a big deal. And so recently, in January here, we made a new low in the US dollar, so that's the black here. And then recently we've broken this downsloping trend line on the MACD, and I like to use the PMO as well. So, but what you see here is we have a higher low on the momentum indicator, a lower low in price, and on this low, we're now changing direction on this trend line. That is a really big deal to me. And so when this trend line breaks, so in this case it was here, so everybody was calling for a new bear market in the US dollar back in July 2016, and I'm like, I don't think so. It looks like it wants to go higher, and sure enough, it shot up. And then conversely, over here, it rolls over on the indicator, and it's breaking, a long uptrend this way, but it also broke a few months later this uptrend, and you can just see the top marked on here. So being aware of the direction of these trend lines are really important. So it's your momentum trend lines that you want to be aware of. And you can see when we snapped this 5-year trend line on the US dollar, it was a pay attention moment because all of a sudden it went vertical. And when you see those big trend changes, here was another example back in 08, and obviously we had some issues in 08 with the equity market. As this fired up, the currency was kind of signaling it, but look what happened on March of 2009. We started to roll back over. We broke the uptrend that we had, and this was also confirming that this was the final low in the equity market. So the US dollar topped out at that moment, and the equity markets reversed. So changes in currency directions, I think, are critical to be aware of. So you always want to know when a currency is starting to change direction. So the signal we have this week that it happened a couple of weeks ago now, but the point I want to make on here is we've got a cross on the signal line. So from momentum indicator, like Aaron was just describing, we've now turned up. But we also have a higher low when price has a lower low. So that's a positive divergence. And now we're starting to break this down sloping trend line. So to me, this is a big deal, like a really, really, really big deal. So when I try to watch the markets, this is what I'm looking for. I'm looking, if I had to draw one trend line on a chart, I want to know more about the momentum. Well, not more, but I definitely want to know about the momentum to try and help me manage the trade. So in this case, the US dollar hasn't broken the downsloping line yet here, but it's already broken the momentum. So if nothing else, I'm extremely cautious that the dollar might start to break to the upside. Okay, so here we are. This is the daily view, and you can see we've got a triple bottom going here, and we've got a lot higher low on the daily MACD, and it looks to me like it's starting to fire back up to the upside. And if the dollar was starting to break out here, you know, it'd get this sort of response, the same thing we got in here as it goes above zero. All of a sudden, the dollar can really travel, and again, over here, it went above zero. So when you're getting these moves, it's an important place to be aware of the potential for a trend change. The reason I mention that is a lot of people have been told to get into the European markets and foreign markets. And the reason they've been told to do that is because the US dollar is weakening and the US dollar is in a bear market. Well, my point would be if the US dollar is about to change from a bear market to a bull market, or at least a long uptrend, I want to be very aware of that, because in your foreign market ETFs, let's say you've bought EEM or EWG for Germany or something like that, when the US dollar is falling, that market will go up by the amount Germany goes up and by the difference in the currency. So when the US dollar starts to rise, that actually hurts your gain. And so one of the reasons that the European markets outperformed last year is they outperformed on the ETF, but they didn't outperform in reality. So Germany was up less than the S&P 500, but if you were in a German ETF priced in US dollars, you outperformed the S&P 500. So it's that currency issue that really makes a difference. So here's the euro on a 10-year deal, 10-year line. 08, we all might remember that headache, 2011, 2014, and now 2018. And what we're watching here is if the US dollar starts to go higher, that's going to kick the euro lower. Now, the euro had a big level of horizontal support and resistance that it's trying to get through right here, right now. What we don't know is which direction is going to win. What we can see down here is we've broken a 15-month trend line on the momentum indicator, and there's another longer one that's kind of 2 or 3 years. So it doesn't necessarily have to break this 3-year one. 15 months is plenty long to get an idea of what's going on. And normally, this isn't a rule, but it's pretty good guideline. Normally you'll get one whip and then a rise, and the trend line goes across that whipping point before it breaks down. And so in this case, that's here and then back up. So you know, this first move here would have faked you out. It was still worthy of a trade. It was 5 cents or whatever. But from the long-term perspective, nothing had really changed there. But what we did here, you can see that this PPO line got broken just as this 3 or 4 year trend line broke. And that was a pretty exceptional move to be a part of. Now we're at the other end. Now we're starting to break down on the euro. And the euro makes up a big part of the dollar. So if the euro is breaking down and the yen is breaking down, which is the next chart I'll get to, those are the two that are the biggest components of the opposite side of the US dollar. So you really want to be aware of where they are. So here's the euro daily, and you can see how close to this upsloping trend line we are. And the momentum on the MACD, or PPO in this case, is just going below zero on a daily chart. So as that happens, as the momentum wanes here, you know, and you're getting this breakdown, it's an important thing to be aware of. So I think major trend changes could be in store if this starts to really reverse hard here. Now, we also have a 65 period moving average on here, and I just find it works better on the currencies than than the 50 or the 200 day. So you can pick your own line. But the bottom line is I've got support on a trend line and support on the 65 period moving average here. Back here when that happened, it did hold. Now the question is what's going to happen. But to me, it looks like the euro wants to go lower on both a weekly and a daily. Getting into the Swedish Krona, I like to use this as a guide to help me with the direction on the euro because it's such a small currency. It usually moves first. And this broke a week ago and told us that it's ready to break down the momentum. The PPO is going below zero. And so with all of these things falling down lower, I'm expecting the euro to break. So that's another clue that I think the US dollar is going higher. For the British pound, we could see this was the Brexit currency candle, and so it was sitting up around here just before the vote. And so now here we have it. We've got back up and tested that level, but we haven't been able to get back through it. And the problem is that this trend line on the PPO has started to break. And so to me, it suggests that this resistance is going to be pretty significant for the Brexit. Or for the British pound compared to the US dollar. Getting into the Japanese yen, and this is one of the most important ones because commodities, like I have gold in the background here, you can see that, so it's gold on the left-hand scale and the yen currency on the right-hand scale. Look at how closely the price action tracks. Now, where these two lines don't cross, doesn't matter because they're two different scales. If they were on the same scale somehow, percentage as an example, we could probably track that. But we're not so much concerned about the percentage, we're concerned about the direction. And so if the yen is going to rise, then we would expect commodities to rise as well. The yen has now broken this big, huge, long trend line. Gold has broken a long trend line, but neither one have kind of broken through the base they've built. So at this point, it's worth watching. But what we see on the PPO in this case is the yen isn't threatening to break down below a previous low. And it has a 5-year uptrend going. So at this point, this could be resistance. Now I have another chart I want to show you. This one I use JPY USD. The next one is XJY. Now they both track the same thing. It's just expressed differently. So that other one was in pennies and this one's in dollars. But this 95 level is pretty important. And let me just show you again, here's the setting for that. You can pick number of days or years or select start and end, and you pick this, and then that'll give you this slider bar, and then from here you can just extend this out. And the point I want to make on these currencies is look at how important this 95 level has been to the yen for many, many years. So we're right at a major resistance point. Even if it rolled over here, it doesn't mean the uptrend in the yen is done. It just means it might need to come back and relax and maybe all the way to this more gradual slope. But at this point, the yen still looks like it wants to go higher, but it's up against resistance. So we're watching it very closely. And when we get in on the daily view, the yen is breaking this 3-month uptrend. So I'm at the point where I really want to be careful on commodities here, because if the yen's going to roll over, that's going to be harder for gold and silver to go higher, because as I showed on that first chart of the yen, they track each other pretty well. Here we have a break in the Nikkei uptrend, but we also have another trend that's been formed here for the last 2 months. If the yen starts to weaken, that's bullish for Japan, and the Nikkei could start turning up. So all of these things are going on, but the point I want to make is if the US dollar starts to rise, we really have to worry about being invested in foreign markets in US dollar-based ETFs. So caution noted, and hopefully if you're sitting in those ETFs, you could move into a hedged ETF like HEWG instead of EWG, and then that would play Germany to the upside as an example, but it would be hedged for the currency. Anyway, hopefully that helps, and we'll kick it off. We'll switch over. I'm going to pass the torch to Erin. She's going to take the 10 and 10 calls right now, and we're going to start off with Blackstone Group.
Indeed. Let's see. Did we have a summary for your?
I didn't make a summary slide,
Okay.
but I think our producer might have built one, and we'll put it in there.
Yep. Oh, there it is.
Yeah.
He's so on top of things.
Oh, yeah.
Symbols discussed today. So those were the ones you went over, and we'll have this slide in the Market Watchers Live blog just so you can get an idea of what we discussed and which symbols were covered. And with that, let's go ahead and do this. I'm going to go ahead and grab it, and Blackstone was the first one. So I already had that. As Tom says, I cheated a little bit. So what I look for, the whole point of the 10 and 10 to 1 before I really get started here is to show you all how easy it is to annotate and save charts to a chart list. And so really the idea behind this is to go fast and show you what you can do as far as annotations. But of course, in the process, we end up giving you some of our own analysis. So with that, I'm going to proceed. So when I looked at this, when I looked at Blackstone, it's not the typical double top pattern because we did come down into it, and that typically is a reversal pattern. So while it isn't probably textbook, I did see this as a double top. And when we dropped below here, that was the drop below the confirmation line. That also dropped us below the 200-day EMA, which is an issue. You can see the PMO is still moving downward. It had tried to decelerate. You can tell just a little bit there, but not enough to be excited. And then also you can see the OBV and the scooter are moving downward. So if you were to calculate a minimum downside target based on a possible double top here, it would bring you all the way down here to like the $29.50, $29 range, which would put us in line with this low back here in November and in the middle of that gap from back in May. So it'll be interesting to see if it can keep it up. But my thought is I would be out if I were holding it. I would consider it for a short, but yeah, at this point, I certainly wouldn't go in and start buying it. So, all right, next one.
Okay, Ford, symbol F.
Mm-hmm. Yes, I remember this one in the chat room being a popular selection. All right, so let's go ahead. I'm just right off the bat, I'm going to draw a few trend lines here because I see this rising trend that we're in. And yesterday we did not break below that, which I think is a positive. I'm going to thin it out a little bit more. We came down and didn't even actually get down there to test it. And of course, we closed above. You can look here, just about on that 20-day EMA. So you're getting, price, these two EMAs are starting to squeeze, which is good. And you want to see a 20-50-day upside crossover. The PMO is acting in a good way, and you could see the scooter as well. So while I'll be honest, I'm not on the buy side for much of anything. So I'm not going to, I'm going to tell you whether it's a kind of a buy or a sell setup, but I can tell you right now that personally, I'm mostly on the sidelines until I'm really convinced that we have a bottom here. But anyway, so we're in this nice rising trend, but this is the area of overhead resistance I'd be paying attention to, as well as notice it lines right up with that 200-day EMA. So I would be careful. I suspect we may, if we start seeing the market continue lower, I would look for Ford to not be able to get above that 200-day EMA. But at this point, I think it looks promising. So I'll save these changes, and I have my 10 and 10 to list. And I've actually gotten this all ready to go, so it'll be easier to upload. All right, next.
Okay, and just so a question, when your PMO turns up on the S&P 500, is that when you'll start looking to get long, or?
Really, I'm just watching the price action. And sector rotation. Like I said, I'm a little concerned because you saw my sector table, and everything is on a neutral signal. And at this point, at least today, and somewhat yesterday, the best performing sectors were in that defensive area of the market. So if I'm starting to see this bottom, which is great, but if it's in all of these defensive sectors, that would concern me, and I'd probably either get into those defensive sectors or just, as I said, continue to sit partly in cash right now. I'm still very much invested, but I have a lot more in cash right now than I did prior to this big decline. So,
Next one is Microsoft.
all right, Mr. Softy, as Tom likes to call it. All right, get into our annotate tool. I'm going to go straight into auto support and resistance. A lot of people ask me how I get mine to be translucent like this, because I do like to make them fat and translucent. Basically, when you're in making a trend line somewhere, you can select what you want as your colors. And so what I do is I slide this and find some opaque, not opaque colors and turn them more transparent by dragging this. And then I have them already set up in here. Once they're set up in there, if I've used them in the last 3 times, it'll show up. And the lightest one is the one I'm going to select. And that'll give me that translucent, transparent auto support resistance line. So just for that information. Okay. And so I'm looking, when I look at this, we're sitting right on that area of support. And, you know, the PMO has just turned negative. Volume isn't looking very promising either. But the fact that the scooter is still showing us a pretty high batting average, I suppose you could say, I wouldn't, you know, write this one off, because we are sitting right on this support level, pretty important support level. The issue I have is this 20 getting ready to cross below the 50. I think that could be a big problem. However, if we're holding the support level and manage to bounce up, I think that would be promising. But Microsoft, you know, I think it's stuck in that technical, you know, technology sector with, you know, the big guys that are having some failures, and it's getting kind of caught up in that. So I think it's probably a stronger stock than those other ones. So I think we could see that bounce, and the fact that it hasn't just completely fallen apart like some of its counterparts, I think is positive. But I would want to see this PMO at least showing some deceleration. Right now, it's suggesting to me, between where those are located, that we are looking at more likely a breakdown here than a breakout or move higher. So that was number 3. I better get moving here.
Okay, Home Depot.
Okay, whoops.
HD, yeah.
I'm getting so much better about recognizing symbols. This one I think is very interesting. And I say that I'm going to again put the auto support resistance in here. And, you know, it fell below that area, but we are holding on to the 200-day EMA. And the PMO is trying to scoop higher. You know, it makes sense that we were seeing this, you know, move lower, but we flattened out when we started to keep the same acceleration downward, I guess is the best way. So it flattens out when that acceleration or deceleration starts to be even all the way down. That's how you'll get to the flattened PMO. It's measuring a difference in that acceleration or deceleration. So when we see it flatten out like that, that can be a good thing if we're in a nice trading zone. But I would be looking for this bounce off the 200-day EMA. I think that's very promising. OBV is not anything great, but it looks like that 200-day EMA is going to hold up. I would really like to see a move above 175 before I would consider getting in, though.
And okay, and what about McDonald's?
Okay, let's see if I'm going to be loving it or not. I know we say that all the time. Oh, no, it's
MCD.
CD, yeah, of course, MIC. It's a MIC something. They always are. All right, well, the first thing I'm noticing is reverse head and shoulders setting up here, and it did come right down into that pattern, so I think that's a positive. Let's go ahead and I will mark that with some arrows. So left shoulder, right shoulder. I'll go ahead and make a auto support resistance right here at the neckline. And, you know, we're holding on to this 200-day EMA mostly, I would say, and that's a positive. Look at the PMO's on a nice buy signal, and it is slowly rising, and I like this setup. I do like that reverse head and shoulders. And so I would certainly keep this on my watch list. And, you know, I would like to see it break through there to actually confirm that it is a reverse head and shoulders. But the fact that we're above that 20-day EMA, we're mostly holding the 200-day EMA, and that positive PMO is great. Not thrilled with the OBV, but you can see it is trying to turn around. We're already seeing one top now, two tops higher than that previous one. So yeah, the scooter's healthing up too. All right, so that was number 5.
Yes.
Okay, and like I said, I better speed it up a little.
And we got Boeing next.
Okay. Alrighty, here we go. Yeah, interesting. So I'm going to look at the support resistance again. I'm going to put that in because we're bouncing off of that, and I like that. Of course, we just got, it looks like we're getting at 20, 50-day EMA negative crossover. I'm going to look over here, and yes, right now we're going to get that intermediate term trend model neutral signal. So that is a concern. However, I think it's coming in a bit late. That again, that support's been holding the PMO. Let's see, I'll go ahead and give you that. The PMO is decelerating. It wants to turn around. And again, when you see a scooter sitting above 75 for that long, I mean, you know this is a strong stock relatively, and I would look for that bounce. I think you could make a case for a possible head and shoulders sort of setting up here, but that bounce off of that support I think is positive. And let's put that, and that's number 6.
Okay, and one of the Canadian ones would be SII.TO.
Alrighty. Okay, well, I mean, let's get in here. Like I was saying, I mean, we do have this nice scooter sitting above that 75 range, and it's been pretty consistently above 90 even. So I think that's obviously a positive. I see kind of a trading range here though, although, well, no, wait, let's do it this way. I think we can see an ascending triangle. And I'm gonna make that thin now. I think you could make a case for that right here. And then this is pretty much a flat top there. So that is a bullish pattern. So you should expect a breakout to the upside there. The PMO, when I look in the thumbnail, it is trying to decelerate here. And look at the OBV, it's moving up higher. So I do like this. I'd be looking for a breakout on SII.TO. And that was 7, 6?
6, yeah.
All right, short-term memory isn't what it used to be. All right, next one.
We're going with MJNA.
Okay. Here we go. Oh, medical marijuana. All right, I'm sitting in California, the place. All right, let's go to annotate here. And again, we'll start right off the bat with the support and resistance. This is a bit of a problem here. This was a really strong area of support, and you could even say resistance to some effect. But mainly, this was a really strong area of support in my mind, and we broke down below it, and I don't like that. The PMO is heading the wrong direction. It has flattened out, so it's not, horrific. But yeah, volume is pretty much nothing really to write home about. I mean, I guess you could look here in the thumbnail, it is a little bit above average here as far as what we've seen lately. And as far as let's see this other support line, where is it? Is it holding itself up here? So that, that's not too bad because that is coming down on these tails back here. So this could be an area to look for a move to the upside. This is almost a penny stock here. So again, the volatility is going to be very.
Yeah, I should have looked at that earlier.
Yeah.
Sorry, I didn't see that.
Oh, so I mean, people requested it, so obviously there is some interest, and that's 7.
Yeah, I might have made a mistake because we did McDonald's in there, so it's 8. So even Greg with his pen is missing some. Apple.
Yes, always positive. Always people want to watch what's going on here. All right, get into annotation mode. So we have found, it looks like, some area of support here. Let's get back here. And it does match up fairly nicely with previous resistance and support. So we could look for a bounce here. The issue, of course, and I'm going to go ahead and circle it right here, is this 20-50-day negative crossover. I have to say I'm not really thrilled with the way the PMO is acting here in its downtrend. We're not seeing any deceleration back here. It's going just pretty much straight down. And, but ultimately you've got a scooter that's decent, but volume's just not that good. This is the place where if it turns, this is where it should turn around. It's holding, but I'm not so sure we're ready for that bounce. I don't know that it's ready to move there just because there's so many negatives right now in this chart. But, we know Apple is a strong stock, obviously having some issues with the rest of technology, but this could be that area. As I said, just from my macro perspective, I am not convinced that this is going to hold up for, the market in general, these bottoms that we're starting to see today. But, so that does tinge my view, I suppose you could say.
Okay. And we're going to wrap it up with Activision, ATVI.
All righty. I know we were talking about these a couple months ago with Tom. I think he was interested in EA, and you were like, well, why don't you go with one of the stronger ones in that space? I think you picked this one. You were like, why would you pick that one? All right. There we go. Make that more translucent. I mean, it's in a pretty horrible declining trend right now. And it right now, I mean, it's at an area where it needs to find that support. It acts like it wants to. The 200-day EMA is there too to sort of strengthen that up. But, the PMO is just not interested in turning up. And it's now reading lower than we've seen it all year long. And so that would concern me. And again, I'm still feeling a little bit iffy about the market, and especially these types of sectors. So I would be waiting to see if that 200-day EMA will hold up. Obviously, I think it will hold up if the market's 200-day EMAs hold up. But at this point, like I said, I'm not seeing enough information to say, yep, this is it. This is where we're going to see that bounce. I think this is as good a place as any for it to find that support. But I'm just not so certain that we're done here. So
okay.
And with that concludes the 10 and 10. And there are the symbols that I just went over. And since I did those symbols in the Market Watchers Live list, they're already there. So if you want to go look at those annotations, feel free. And again, you can get to that Market Watchers Live chart list by going to the blogs page. Go to the Market Watchers Live blog, click on it, and the link to that live chart list will be right there on top. So all set with that. And with that, I think we need to do our quick little plug for ChartCon. So I'm going to get that here for us to look at. Oh, not that one. There we go. So I know we're all very excited. This is in August. It's an online conference. What we're going to concentrate on is reducing risk. So all of our speakers, and there are so many of them, as you can see, it's just going to be a great conference. And, at this point, you can still go ahead and try to, you could still go as a VIP and actually come to the conference with us. But at this point, I would just suggest that you go ahead and get your price in there, get your online set up. This is an early bird price. I think it's going to be going up to $299 in another month. So I would get in there and get set up for this online conference. It's going to work just like Stock Charts TV. You're going to be able to go back and forth through the stream. We will probably have some ways to interact with you on social media, which will be a lot of fun. We'll be tweeting, and MKT Watchers Live is our Twitter handle. So should be very interesting, but go ahead and do that. And I know, like I said, I think you can still come live with us as a VIP, and there's more information on that on the website. But for now, I just wanted to let everybody know it's happening in August, and the price is not going to be $199 forever. And also, for that price, you also get to keep all of those ChartCon presentations to go over and have in your library. And I know that last 2 years ago when we did this, a lot of people are still looking back over some of those videos that they got, and we're getting, we got some great feedback on our online foray last time for ChartCon. So, and with that, I'm going to go ahead and move into a market update for us. And let's see what's been going on while we have been in the midst of our interesting discussions here. I'm going to go ahead and let me get the screen back. Oh, I have the screen. There we go. So I put in a few different ones, and these are the ones we were looking at earlier today in the market update. So I thought it'd be good to look at these in candle glance once again. And as you can see, most of the markets are really trading in a range right now. It's rather choppy. The Dow, though, is staying in positive territory. So far, the S&P 500, though dipping into negative territory, is staying on the positive side. Similar situation for the NASDAQ. So technology looking very similar to what we're seeing on the S&P 500. IGH, the mid caps are, I think they're certainly doing better than what we're seeing from the other larger cap indexes as it consolidates sideways, but a bit higher above the line there, above yesterday's close. Russell 2000, small caps up as well. And, they've pared back some of their gains for the day, but not nearly as much as we saw, for example, in the S&P 500. Toronto TSX is also lower. Looks like it may have put in its intraday low. Currently, it is trying to move higher. And we see treasury yields are up, currently reading 277. And we have UUP has gapped up, is now consolidating sideways mostly, but is higher, currently reading 2362 for UUP. USO is up, looks like it's forming a bit of a double bottom here. We could see this rising trend continue. It's managing to get a little bit stuck here right now. Hasn't quite gotten back to its intraday highs, but 1281 for USO. Gold gapped down, but is making its way back up. And we can see the volatility index is lower on the day than yesterday, but still reading around 22. So I think there is still a little bit of concern out there, but we've certainly taken some of that back after yesterday's big decline scared a lot of people. And healthcare, which was doing the best earlier today, has pulled back some of those gains. So let's go ahead. I'm going to look at that market summary, and then we'll get ready to get into our agree disagree segment. And we will organize this by percent change. And I wanted to go to the spiders. So as you can see, healthcare was the leader as far as the ETF sector ETFs, but we've moved up with energy and materials and staples. Those are three areas for me I don't really want to see the market moving into. Those are those defensive sectors. So we really need to watch this closely, in my opinion. If we get that bounce, but it's coming on the backs of these particular defensive sectors, I would be concerned about a bear market in the making. As far as U.S. industry indexes, airlines and transports doing the best. And we can see that gold is the laggard today. But if you recall, gold just took off yesterday. It was a great day for gold yesterday, but it is taking back some of those gains. And with that, I am going to complete the market update. But was there a chart or two you might want to expand upon there, Greg?
I think the biggest thing would be natural gas continues to try and make its low, and the seasonal on natural gas is outstanding. I think it's 10 out of 10 or 9 out of 9 for the last 10 years. It is trying to work its way higher, and of course, seasonality doesn't always keep going for us. So there you are. About 75% of the time, but I think over the last 9 years, it's 100% or something. So it's
it's in there. Well, that's a good one.
Anyway,
yeah,
it's
that's the idea.
Yeah, it might be that. Whatever, we'll leave it there. The big thing is, I think natural gas is trying to work its way to the upside. There's a lot of the energy stocks, but if oil's pulling back and nat gas is going up, you might end up with a no gain. But some of the stocks like CLR are trying to break out to new highs and that kind of thing. So anyway, with that, it's one of the charts that I'm interested in, just keeping an eye on that.
All right. Well, let's go ahead and start our agree, disagree. And this was the statement we came up with. It is time to buy Tesla. And you can go take the poll. And even if you are watching this as a recording, if you set up a little profile there in the upper right-hand corner of Slido, you can take these polls even if you are not watching this live. And so let's go. I'm going to go ahead and show everybody what we're looking at right now as
Sure.
far as that poll. So let's go ahead and take a peek at that. So if, yes, go to our new Stock Charts TV. And what we want to concentrate on here is the live poll. So here's where you would set up your profile and go ahead and take that poll. Currently, it looks like we are doing, let's see, I got to vote here. I'm going to say no comment right now just because I don't want to give away my position. But as you can see, as far as disagree, we're looking at 70% right now are disagreeing, and we have 14% on the agree section. So thought that would be interesting to look at before we get into our whether we're going to agree or disagree. So did you want to start, or do you want me?
Sure. Why don't I fire it up? You've
Yes.
been going for a bit here, so I'll take the screen. And what I want to show on Tesla, I like to look at two things. So one is this MACD reading is at one of its lowest levels ever. It's clearly broken through support, so that would scare away most people. But Tesla has a fan base, much like Apple, where the Appleites or the Teslites or whatever we want to call them are very convinced in that Elon Musk is one of the greatest entrepreneurs ever. And so looking back on the daily MACD, so here we are, Tesla, you can see that in 2016, this low, this extreme low on the MACD was one of the best buying points for Tesla, 141 to 269. It was a $130 move. I don't think you have to front run it. Look at the volume. It was obviously scary, scary, scary. Lots of people really unloading on that. And when you get those extreme volumes, I think you need to be aware that there's probably a trend change coming. We saw it back in 2014 too. Tesla pulled back really, really hard at the time, 194 to 116. So it was an $85 drop or an $80 drop. And this big dip was a pretty important place. So not telling you to be early, but I would suggest that at least have it on your radar. Now, that's a daily, and I fully get how uncomfortable I would be buying Tesla right here with all of the new shares coming out, and they need to finance their debt, and every other rumor out there is pretty strong. But again, the market doesn't usually wait for everything till the roses are red on this thing. They'll move it all the way back up, and then when everybody's long, they take it the other way. So Tesla gives us a buying opportunity on the full stochastics, not as often, but the rallies are pretty good. Like even this little rally halfway up here was 187 to 236. You can make money on that sort of change. So with a $50 gain just on the little ones, now we have a huge break of support here, so I realize nobody's interested. But I would suggest that if you get the turn up here on the full stochastic, that it would be at least worth watching to see if you want to take a position, and maybe use an option to do it instead of buy the stock outright. But any sort of break back above the 20 level, I think, is a place you want to get long Tesla. They're going to get their Model 3 figured out. I realize the news is horrible on it now, but my view would be that Tesla probably isn't a buy yet, but what would make me buy it would be a turn up on either the full stochastics on the weekly. That would be my preference. That means it's come 20% off its lowest price. So it would have to bounce up quite a bit before it's a buy, but that would motivate me.
All right. So you disagree or agree here?
So I disagree that now is the time to buy Tesla, but I would explain that that's when I would buy Tesla. And
Okay.
I did write a blog article on it called "Another One Breaks Support" under "Don't Ignore This Chart," and it's about Tesla. And I talk about these are the four previous times it broke through support, and everybody hated the stock, and they were absolutely wonderful buying opportunities. So if you're a contrarian, I wouldn't be early, but I'd sure, if you get the turn on the signals, I'd be happy to revisit that trade.
All right. Let's see. Let me get to mine. I think I figured out my screen share problems, guys, so we shouldn't have any more of those. All right, so I'm going to start on the daily chart. And there are a lot of interesting things here because when I first looked at this, I had kind of a preconceived notion of whether I was going to agree or disagree. But the more I look at these charts, I think there's some very interesting things to note. So my first problem when I looked at the daily chart was where's support? Because we haven't seen lows like this in the past year. I think that's what I have my chart set up for. Yeah. So that was a concern because I like to know where am I looking for support and are we close? Are we near what's going on? But I did notice a double top formation. And, you know, if you calculated the target, minimum downside target, we are bouncing like almost right off of that. And I thought that was quite interesting. But remember, these targets, the calculations, they're not the maximum. That's not what you should expect is that's all you're going to get. These are minimum. So the minimum downside target for the double top was here. So I'm not saying that it can't go below that just because the target was hit. But here are some very interesting things that I have to note here. One, and I'm going to go into my annotate tool so I can be even more specific. I don't know why it keeps getting a little blurry when I go to my annotate. So one is a possible island reversal setting up here. One of the others is the PMO is starting to decelerate. So I think those are all good signs. So those I'm going to leave on there. But like I said, I wanted to go look at the weekly, and I think that would tell me a little bit more information. So I have actually set up my weekly. There we go. So there's the support line, and clearly we broke very cleanly and quickly below that. However, even though I think the next area of strong support is, lies back here all the way down at 180, I think you can make a case. And let's get my trend line set up here. I want it blue. I don't need it that thick. Okay. Look at the support right here. And we're bouncing right off of that, as well as the rising bottoms trend line. So I have to say that originally I was going to disagree. And I still think there are quite a few problems here. This is, in my opinion, we're talking about that falling knife. We have to be really careful, which is why I think your advice of, keep it on the watch list. And if it starts to make its move, go on in there. But I think you could make a case that that it is a good buy now. Personally, just to let everybody know, I am not going out and buying Tesla today. So I'm just saying that I think you can make a case that it is time to buy Tesla. So I'm going to play contrarian here and go ahead and agree that it is a time to buy Tesla. But like I said, there are still some problems here, but we can see that weekly PMO hasn't quite dropped below the zero, and you still have a, wow, that's weird. And you still have a rising trend here on these bottoms. So again, I'm not as concerned, but you can see we're coming in here and getting ready to move below that. But if we get that too far below the zero line, that certainly would spell trouble as well. So I think you can make a case for it, but yeah, there's certainly negatives. I mean,
Aaron buying Tesla at 267. I got that.
Yeah, you're writing it down, everybody. So yeah, so I'm going to go ahead and be contrarian there and say that I am going to agree. So here are what we're looking at. Our live audience is also saying disagree, and I'm just taking a quick look at it, and 70% disagree. So 70% are bearish on Tesla. Right now, only 14% agree. So I certainly am in the minority when I do that, but I have to say, to some degree, I am playing contrarian devil's advocate there. So like I said, I'm not running out to buy Tesla right now, but I think you could certainly make a case for jumping in early.
I hear you. I think the big issue, I mean, they'll sort out their Model 3 production issues and all that kind of stuff over time.
Mhm.
It's the question is, will the debt eat the company before the company gets going? And anyway, there's enough
Yeah.
people that are willing to invest in it, and they had other companies like Amazon that they didn't really care if they made money. They were willing to put money into it as long as the dream was alive. And
Sure.
I anyway, so don't use price earnings ratio because there isn't one. But I would just say that there's a reason to look at it, and it's mostly because the Tesla fan base is unbelievably
Yes.
friendly towards the stock.
Oh
So
yeah. The fan boys and girls out there certainly wave the flag. Yeah, the Tesla, I can see why people are really they have their fans regardless of what's happening as far as yeah, earnings and that sort of thing. So it'll be interesting to see how this goes, but I have to say I'm actually thinking about being in the market for one. Okay, well, wow, this was a great show. I had a lot of fun with this. We did that agree disagree. Were there any questions in the chat room that we wanted to maybe just we have a minute or two here?
one of the questions was, is a rising dollar good or bad for the market? And the only major concern, maybe I should just take the screen and
Yeah.
just we'll wrap it up on this one. But um, the only major reason that I think it's important to be aware of the dollar is that if I take the US dollar um, and look at where its low is, and I line it up with a few other indicators. So I'm just going to add some others here, like TLT, and let's just grab a few more price. Let's pick oil and price, and we'll go with the S&P 500 and price. I just want to grab one more, dollar gold. Actually, let's use West Texas. And the point I want to make is that a lot of these made their mark all at the same time. I got one problem here. This one's in area view. And let me just make it solid. Color will be auto. And opacity is normal.
There you go.
And I'm just going to set all of these to 1 so all the charts are the same size as the main panel. And because I have restricted the chart size here in height to my vertical size of my screen, um, it should work out a little bit better. And we're going to make this above. Okay, height, set it back to 1. There we
All
go.
right, we got to wrap this up. So let's get
Yeah,
this
so
start
here
going.
we go. The big point I want to make here is that when the US dollar bottomed, almost everything else rotated with it. So
Mhm.
I think it's pretty important here that we be aware that other things are rotating with the dollar. So it's a pretty concerning place.
Right, right. And I think that it it can go both ways, depending on how long the dollar's been doing well, what's going on, of course, around the world. But I mean, I've seen plenty of times where a rising dollar hasn't been all that great for the market. Um, so we'll have to see how this works out. Like I said, I'm still very uncertain about what's going on in the market. I still think that we still have some bear market possibilities. I'm not going to give up on those just yet. So what's going on this week? Tomorrow we have Mary Ellen McGonigal. I can't wait to talk to her. And Bruce Fraser will be with us on Thursday. He will certainly give us lots of information on Wyckoff. And Greg will have his workshop on full stochastic. Actually, no, you're going to do Keltner channels.
Yeah.
And he'll be doing that on Friday. So with that, I want to thank all of you for being with us today. Please remember, actually, I don't know if we have the survey set up. So please go ahead and send us email, marketwatchers@stockcharts.com, if you have anything feedback you'd like to give to us. Our Twitter handle is @MKTWatchers, and we'd love to get your feedback on Twitter as well. As a quick reminder, Market Watchers Live airs 5 days a week, Monday through Fridays, live from noon to 1:30 p.m. Eastern. On Stock Charts TV, we do have reruns during the day. Have a great afternoon, everyone, and we'll see you back here tomorrow. Happy trading.
you.